China is banning all cryptocurrencies. Or are they? Crypto has become one of the hottest topics and investment choices in the business and financial world. And over the last 2 years, cryptocurrencies have basically taken over the world. Like for instance, at the start of 2020, which I know that feels like kind of a lifetime ago, one Bitcoin was valued at around $7,300, which honestly sounds like a lot, until you learn that Bitcoin hit its peak price just over a year later at $65,000 per coin. Ethereum, or Ether, did the exact same thing. At the start of 2020, one Ether was worth about $137, but just over a year later, it would cost you over $4,000 for one Ether. And the infamous Dogecoin was not even worth a penny at the start of 2021, but nearly a year later, it would cost you about 57 cents per Dogecoin. Needless to say, cryptocurrencies have gone straight up to the moon over the last year and a half, with more and more investors pouring more and more money into crypto. We even saw full countries like El Salvador actually adopt Bitcoin as an acceptable form of payment. And many companies and investors have started to speak out in support for Bitcoin. And I'm not just talking about Elon Musk and Tesla here. So if there has been so much widespread support for Bitcoin and other cryptocurrencies, then why exactly would China want to ban them? Well, that is exactly what we'll be talking about in this video, so make sure to stick around till the very end to learn everything that's going on with cryptocurrencies and this new China crypto ban. But before I break that all down, make sure to smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world and we can keep making videos just like this one. Thumbs up for doing that. A lot of people don't know this, but cryptocurrency isn't anything that's actually new. Like, cryptocurrencies have been around for a long time. At least the idea of cryptocurrencies has been around a long time. Like back in 1983, cryptographer David Chaum created an anonymous form of payment called eCash. eCash was electronic money, and later that would turn into digicash, but not a lot happened after that. The big idea here was that transactions were untraceable because it worked on cryptography. That meant that no bank or governments could actually track the transactions, which means you could spend money and nobody would really know. In 2009, though, the first decentralized cryptocurrency hit the market, and that was called Bitcoin. Bitcoin was created by a developer named Satoshi Nakamoto, although we're not really too sure who that is or if that's their actual name. The big difference with Bitcoin, though, is it existed solely on a blockchain. The blockchain records every Bitcoin that has ever been created, so that makes it very hard to duplicate a coin or make an illegal transaction. Today, tons of other cryptocurrencies run on similar blockchain technology, including the second most valuable cryptocurrency in the world, Ethereum. The blockchain will actually record a timestamp of when that coin was created, and it has a full history of when that coin was sold. This means there are no counterfeit Bitcoins or other cryptocurrencies. Once Bitcoin was created, it was open to the general public, and they were able to actually mine more coins, which just means creating new ones. Mining a coin simply involves running a software on a computer over and over and over again until a coin is created. And once you have a coin, you can pretty much store it wherever you want, whether it's a flash drive, on your personal computer, anywhere. This differs from traditional money where in order to store it, you either have to have the physical dollars yourself or put it into a bank account. The money is then tracked and then taxed. And cryptocurrency can be used all over the world. It doesn't need to be exchanged for another currency in order to buy things in a different country. That is the decentralized nature of cryptocurrency. There is no central government that controls it. The people control cryptocurrencies. But that might be changing sometime soon. Over the last few years, we've seen governments all around the world trying to regulate the cryptocurrency market, which has had a drastic effect on how people buy, sell, and hold crypto. And since it's still pretty new in the business and financial world, we have seen some crashes and super high rises from crypto just over the last 2 or 3 years. Like for instance, at the start of 2017, one Bitcoin was valued at just over $800. By the end of that year, though, one Bitcoin was valued at around $20,000. Just a year later, though, at the end of 2018, one Bitcoin was valued at just over $3,000. You can see how it continues to crash and rise and crash again. And it's done the same thing over the last 2 years, going up and then back down at a rapid pace. Even still, though, the cryptocurrency market is valued in the trillions of dollars. So why would China want to ban it? Well, since its inception, you can say that China was not the biggest fan of crypto. All the way back in 2013, China actually banned any bank from holding or buying crypto. And in 2017, they banned initial coin offerings, which is basically like an IPO but for cryptocurrencies. This meant that no new coins could actually originate in China because investors could not invest in those coins for them to actually start in the first place. Then, just 2 years later, China actually turned its attention to crypto mining. Like I said before, crypto mining is just a software that you run on your computer time and time again until a coin is formed. And as of April of this year, nearly half of all crypto mining was taking place in China. The problem is mining cryptocurrency takes a large amount of energy. In fact, to mine just one Bitcoin, it takes 1,544 kilowatt hours. That's the equivalent of around 53 days worth of power for the average US home. And currently, Bitcoin uses around 0.5% of all of the electricity in the world just to store and run the blockchain. That's a lot of energy. And current mining operations for Bitcoin consume so much energy that it's equivalent to some small countries. So since 2019, China has slowly started to ban Bitcoin mining across all of its provinces. Which leads us to where we are today, because just 4 days ago, China's central bank declared that all crypto transactions are now illegal. This made the price of Bitcoin and other cryptocurrencies immediately tank by around 10%. China is now seizing computers that were used for cryptocurrency mining all throughout the country. And while before it looked like China was just slowly beginning to ban cryptocurrencies, now they have 100% banned them, which means you cannot buy things, there are no transactions available, and you can't hold or mine any cryptocurrencies within China. So what exactly does this mean for the crypto market? Well, as I stated earlier, nearly half of all crypto mining actually took place in China. That means that crypto mining is coming to a sudden and grinding halt. In the short term, you saw a ton of cryptocurrencies drop in price. This is because there was a massive sell-off when China made their announcement. Initially, people scrambled to sell their investment because they actually wanted to get what they could before China just took it away anyway. And oddly enough, this regulation doesn't always mean that cryptos will crash forever. When the price of an asset actually drops, we see this happen a ton in the stock market. You'll see a large influx of people actually want to buy that asset. But if something's crashing, why would people want to buy it? Well, if there is a lot of worldwide confidence behind that asset, then people will see that as that asset just being on sale. Many people wanted to get in on Bitcoin and other cryptocurrencies when they were on their high for this year, but the price was so high that they weren't actually able to purchase those coins. Now that the price has actually dropped a bit, a lot more people feel that they have the means to spend on Bitcoin. So why exactly would China want to ban a booming asset class? Well, one of the reasons is that because cryptocurrencies do not need the government in order to function. Remember, cryptocurrencies run entirely on decentralized networks, which means they do not need the government or any other backed agency in order to function. Some governments could see this as very dangerous because it puts their currencies at risk. For instance, if more people and more companies start accepting Bitcoin as payment, and people like Bitcoin way more than they like US dollars, for instance, then you might see a shift towards using Bitcoins over US dollars. And since the government's not involved in those transactions, they can't get paid. It's possible that China may have saw this as a potential threat for the future, but there's also another side to this coin that we need to address. Cryptocurrency mining itself has a huge impact on the environment. And since around 50% of all cryptocurrencies are mined in China, the Chinese government may have wanted to use that energy in their country for other things. In fact, China officials did cite excessive energy usage as one of the reasons the country banned crypto. They also found that crypto trading was linked to fraud and money laundering within the country. So with ban of China cryptocurrency, what does that mean for the crypto market? Well, most experts believe that this new crypto ban in China will not have any major lasting effects on the cryptocurrency market. The main reason for this is that crypto is global, which means it's still functioning in a ton of other countries around the world. In addition, you have a bunch of miners that already moved out of China before the ban even happened. That means they'll just simply pick up operations in a new country nearby. But nobody truly knows the direction of what any cryptocurrency is going to do in the future, Because the investment is still so new, it is also very volatile, meaning its prices go way up and way down at a super rapid pace. And like I mentioned at the beginning of this video, some countries have had a super positive outlook on cryptocurrencies. Like Bitcoin is now a fully acceptable payment in El Salvador. In addition, many banks and other financial institutions have made it super easy for their customers to buy, sell, and hold crypto. And just earlier this year, we saw Coinbase, one of the largest crypto brokers in the world, launch its IPO on the New York Stock Exchange. So crypto could have a bright future, but it also has had a ton of hiccups this year. The SEC, or the Security Exchange Commission, is currently looking at ways that it can regulate cryptocurrencies and tax them more. Nothing has really been decided yet, but Uncle Sam pretty much taxes everything in the United States, so it's not unreasonable to think that they'll want to tax that too. It looks like this ban is just going to be a minor setback for cryptocurrencies. But one thing is for sure, China is completely out of the cryptocurrency game, at least for now. Like I said, nobody really knows what direction cryptocurrencies will take next, but if you have an idea and want to share your thoughts, make sure to leave a comment below before you go. Do you think more countries will follow in China's footsteps and start banning cryptocurrencies? Or do you think that cryptocurrencies are here to stay and will only continue to grow as time goes on? Again, no matter what you think, leave a comment below and let me hear your thoughts on this. That's it for today's business and financial news breakdown. Thank you so much for watching, and as always, keep hustling.